New guidelines for ERISA funds and the sort of permission to go ahead with economically targeted investments. Greg, is that a big deal, or is it just kind of an incremental little tick the box development?
I think it's a big deal, and I think sort of it breaks down one of these big, at least mental barriers to investors, right? And I think even if there was nothing necessarily holding back, I think this idea that they wouldn't be doing their fiduciary duty really opens up this opportunity to integrate environmental, social, and governance issues. And I think, as investors start looking at it, as Erika said before, this idea that you're trading off returns, and I think sort of as people explore that more, they should hopefully see that doesn't actually exist.
It never was an actual barrier to look at environmental, social, and governance factors in the investment process, but it was a perceived barrier. The reality is, and I speak as a fiduciary, the reality is that to not systematically analyze environmental, social, and governance performance in the investment process, that would be a breach of fiduciary responsibility, not the other way. So this is a critical moment.
In terms of further reading or homework for investor relations officers, besides at Gregory Elders on Twitter, of course.
Absolutely.
What's next?
BIESG, Bloomberg Intelligence on ESG. And so one of the things that we've done at Bloomberg is we've been collecting all this data for a long time, not just ESG, but financial data as well. Is we started a team a few years ago, Bloomberg Intelligence, providing analysis context around that data. So it's no good, no bad, no buy, no sell, but really data-driven research. And that's something we've brought to ESG as well.
Well, Erika Karp and Greg Elders, thank you so much. It's been such a pleasure talking to you here, Bloomberg in New York. As we were talking about, a very appropriate place to be having this conversation, and it's been really good. Thank you very much.
It's a pleasure.
Thank you.